It's just below 18 at the close today. Let's bring in our closer today, Terry Duffy, the CME Group Chairman and CEO, joins us now from Chicago. Terry, good afternoon to you. Thanks so much for joining us.
Thank you, Wilfred. Appreciate you having me.
So talk us through what you think about those volatility levels, given all of the big macro risks and concerns we've had in the last couple of weeks and the pullback from those highs. Do you gauge it as a reasonable jump in volatility? You expect more?
I think the word you just raised is a good one, reasonable. I think it is reasonable volatility compared to what's going on in the world today, Wilfred. I mean, you talked about the coronavirus, you talk about what's going on all throughout the Asian communities, you talk about what's going on here in the United States geopolitically. There's a whole host of issues where I think that the volatility is at a reasonable level, and I guess some could say it could even spike higher. But at the same time, you know, I think what we're here to do is to manage that volatility, and we're doing it. But we are seeing quite a bit. And I will tell you, Wilfred, most of it is in the equity complex, and then we're seeing a little bit more in the oil complex with the sell-off we've seen recently in the oil markets.
I mean, to talk a little bit more about those different levels that we've seen year to date, equities, oils, bonds, when you see how much more of a risk aversion move we've seen in things like oil and bonds relative to equities, does it make you pause and think that equities are due a bit more of a pullback or not?
Well, I mean, it's really difficult to predict that because, I mean, who would have predicted that we'd see Tesla stock at $700 and some odd today, up $100 and some odd for the day. So it's really tough to say what's going to drive what market down to what level or up to what level. We're seeing the equities at all-time highs, we're seeing interest rates at all-time lows, and now we're seeing energy. If you look at it, it's basically in the mean. It's at 50 some odd dollars a barrel, so you take the 130 or the $20, and you're kind of in the middle to the lower end of it. So, you know, it's really hard to make a prediction if this is going to continue dragging the equities one way or another.
You see anything related to the election, Terry? Obviously, Iowa caucuses today, and Sanders is gaining some momentum.
You know, Sarah, that's a great question. And I think, you know, we don't have enough time on your live show to discuss it, but I think it's going to be the first time that you're going to see, if we have a very progressive government coming in, that you could see a whole new pricing of assets. And I'm not sure they're going up or down, but it's a whole new philosophy than what we've seen historically when people come into that White House. So if we see a progressive movement and coming out with Bernie Sanders being the front runner, which it appears he will be, you could see more pricing of assets in a different way over the several coming months as we go through the election.